Okay, and then, so I think that's good. Just give me 1 second. I can share
Take your
again.
time.
Like, almost there. Oops. Yeah, hopefully this all works.
Fingers crossed, man. I mean, that's frustrating. I mean, we do.
Yeah, I just felt like we had to do something because
Yeah,
every
people
comment...
are saying better. So fingers crossed that it stays that way.
Just going to quickly post the updated link, and then we're good to go.
Yeah, same here.
Updated link.
So let's see. Now we lost all the audience to Dave G. No, nobody's
Exactly.
on our screen. Yeah.
It was all it was Dave's strategic plan.
Yeah, exactly. By the way, can you make it so the comments are running on the screen, like in the they overlay the picture? If you want to, I don't know. Good. By the way, non-alcoholic ginger beer, so that people don't get any ideas. Sounds good. Sounds good.
All right. There we go.
All right. Okay, I think we're all good now, hey?
Yeah.
Hopefully.
So, yeah.
Is the audio better now?
That's what people are saying.
Now.
Fingers crossed.
Okay.
I think so. Vince, play us a tune. I don't know what tune I should play.
Cool. Sounds like the audio is
now.
good.
Excellent. Yes, fixed. Yeah.
I'm not sure how audible the previous one was, so we'll go over it a quick third time. Record revenue, record margins, record launch backlog, escapade in a couple days. LC3 is opened, 100% success rate so far in 2025. Just a continuation. Revenue's looking great. Margins looking great. Electron, there were 17 dedicated Electron launches signed in Q3, 10 of which were the Synspective launches. And then, we got to take a closer look, but does that mean there's 7 that weren't announced? That's looking really good. We do have those additional 3 from IQPS and then the other 2 from JAXA, but I'm pretty sure those were signed in Q4 as well. So looking beautiful in terms of Electron backlog. Competition to place constellations on orbit this decade and limited international sovereign launch capabilities are behind record demand and a robust 2026 launch manifest. Absolutely. So this showing launch backlog value year to date. Yeah, that's fantastic. What are we looking at from the previous quarter? So it went from 409 to 509. Beautiful. Can't complain about that. And that's quarter over quarter too. Launch backlog as of Q2 end 409.6. We currently have 509.7. Oh, I'm realizing it shows right on the screen there. Cross-referencing, don't need to be. 2 Haste launches in 8 days. That's, I guess, half of the launches in Q3. Back-to-back launches with a 100% mission success, advancing national interests in hypersonic technology development with increased test launches on home soil. Majority of Haste launches have flown within days of each other, highlighting Haste as the commercial leader in regular and reliable hypersonic test launches. I do believe, rumor has it that we do have a Haste launch in just, less than a week, actually. So that's going to be interesting to see. Do you guys have anything to add so far?
Nope. Excited to see the rest.
No, there's a lot of info about Neutron coming up, so excited to run through it with you guys.
On track for new annual launch record with 4 launches completed in Q3 2025 with 100% mission success. On target for 20 plus launches by the end of the year. I think we're going to smash through that. I think we're probably going to end closer to 25, but knock on wood, I guess.
9 launches in the fourth quarter?
Would it be not, not 9? No, maybe. No, I'm getting
Are we at
overexcited.
16 or 17?
What are we at?
16. We're at
16.
16.
Yeah. 16. I don't know. We'll have to take a look at the tracker in a little bit here. But I mean, yeah, 20 plus sounds very feasible still.
So we can already see that when Muriel spoke about a couple of more launches, it wasn't a couple. Like she misspoke there. Got us all nervous for nothing.
All right, acquisition updates. So for payloads, we have Geost. I see how they're doing it. So closed Geost acquisition in August, expanding our end-to-end capabilities with launch, spacecraft, and now payloads for U.S. national security. Next up is scaling electro-optical and infrared sensor manufacturing for missile warning, tracking, and space domain awareness. That sounds pretty Iron Dome shaped, if you ask me. Optical systems, this is cool because this should be closing, I mean, literally any day, hopefully by the end of the year. Mynaric financial restructuring in Germany is completed, paving the path for Rocket Lab to complete the acquisition for $75 million in cash and stock, pending regulatory approvals and other customary closing conditions. Worth noting, there's an additional $75 million in like bonuses and whatnot that'll be paid throughout 2026 and 2027. Future opportunities, our M&A pipeline exited Q3 2025 with more than $1 billion in liquidity following our recent at-the-money offering, strengthening our capital position, which enables us to act decisively on M&A opportunities. We were talking this past Rocket Lab Weekly. I think it's probably a pretty good time for acquisitions in terms of what's going on in the market. Mars ready, spacecraft to launch within days. The 2 spacecraft for Escapade are ready to launch from Cape Canaveral. Supposed to happen yesterday, but rain kind of interfered. Supposed to be rainy over the next couple of days as well, so we're looking at Wednesday. Escapade demonstrates our capabilities for deep space missions like Mars telecommunications orbiter. When are they just going to announce this one? Like we keep hearing about it, and it's going to be nice when we finally have that in the chest. Mars missions are often measured in decades and billions of dollars. Our spacecraft were designed, built, integrated, and tested in just 3.5 years, and for a tiny fraction of that cost, thanks to our vertical integration of in-house technology. It's another thing that we were going over in this past episode is those satellites probably cost $20 to $25 million a piece, whereas if you're going with, pretty much literally anybody else, you're probably looking at 10 times that price tag. So to call it impressive is an understatement. SDA Tranche 2 constellation moves into production. The SDA has declared our components, systems, and software for the 18 T2TL spacecraft mission ready, advancing Rocket Lab to full-scale production. The awards for roughly 54 spacecraft for the SDA's Tranche 3 have been delayed by the US government shutdown. I don't know with certainty, but it's one of those things you always have to take with a grain of salt, but it seems like there are steps being made in the right direction for a reopening. So let's hope that goes through. I think once that happens, I think there's a lot lined up waiting for certain companies, Rocket Lab definitely being one of them. Neutron, just beautiful. Path to first launch. Okay, here we go, guys. Neutron is moving closer to the first launch with a significant progress made under an intensive qualification campaign across all systems. Readiness, prioritizing integrity, and performance has been the cornerstone of our success with the Electron. We're applying the same philosophy to Neutron. And launch. Our current plan for Neutron has the rocket arriving at Launch Complex 3, arriving at LC3 in Q1, with first launch thereafter pending successful completion of the vehicle's qualification testing and acceptance program. I will pause there. That sounds to me like mid-2026, assuming it's arriving in the first half. Well, and I'm going to put it out now because the last time that there was an update, I kept getting butted. When this sounds to me like the second half of the year, I think is what we'll call it, rather than mid-2026. I'm assuming this means, Q3, Q4? What's your guys' take on this?
I don't know what we can and cannot say. I was severely attacked for saying Neutron will not launch in 2025. I mean,
I don't know. I'd
personally,
say I'm a little bit surprised personally. Yeah.
yeah, I don't know why they're using this language of like there will be a neutron or parts of neutron on the pad, and then we have to use our imagination of like, do they mean launch? Do they mean yeah, I mean, I think it happens when it happens.
Mm-hmm.
Yeah,
Still up 7%.
Yeah, still up 7%. I think the thing what's different about Rocket Lab is they generally will give guidance to like their, I don't want to say earliest time, but they try to show and like not speculate, right? So I think what they're generally pretty good about is no, call hasn't started. We have 23 minutes. It starts at 5 p.m. Eastern. I think what they generally continue to show is like their path to earliest launch, which, if everything goes well, can be good. So I think that they've been very transparent, and I'd rather honestly that than them building in a bunch of fluff personally.
Yeah.
So I mean, I feel like otherwise, who knows what they would have stated if they put in a bunch of fluff back in 2021. But even still, I think for a brand new rocket program, coupled with you have to think like we're increasing cadence. We're up over 90 something percent in trailing 12-month launch revenue comparatively to where we were a year ago. Like the company's delivering on a bunch of different like wavelengths that yes, if this only were focused around Neutron and they weren't running a different set of multiple businesses and acquiring other businesses, then I'd be like, what the hell, guys? But if you think about it, they have so much going on that they're trying to really juggle so many different things at so many different times. I'm honestly surprised that it's not longer. So fingers crossed that we're really starting to see some of the equipment come to light, and there's beautiful pictures I think on the next couple slides. So, but yeah, I'm curious if there's going to be any further delays in this, but it seems like we're in a good spot. So
yeah,
I'd rather it be delayed and go off without a hitch than them try to just rush it.
Couldn't agree more.
I think you nailed it on the head because the other parts of the business are doing so well. I think they can get a pass on this. Like we can say that this is a little bit of a mess up from them because it was supposed to come at the end of 2024 and then end of 2025, and then I get it, it's a rocket program and nobody has done it before, so it's very hard to give it a timeline. But because the rest of the business is doing so well, I mean, if they get because I was really afraid going into this earnings that what's going to happen with the revenue, right? Because if Neutron is delayed, but I mean they're selling a crap ton of Electrons. That makes up for the Neutron launches, and if they get an SDA award, that space is so yeah, I think they get a pass on this.
Mm-hmm.
Yeah, I think you guys will be pretty surprised when we get to the financials.
Cool. Cool. So major, just continuing Neutron updates, major pieces coming together, extensive testing underway across the entire launch vehicle. So they highlight propulsion, thrust structure, stage 1 tank, stage 2, stage 1 upper, and the Hungry Hippo. Just some more pictures, including Sir Peter Beck there in the bottom right. Testing the structures. Testing the Hungry Hippo. A lot of this stuff we've seen in video form, so we don't need to spend too much time talking about all of this.
Is that in New Zealand, the one with the strap? Is that the one that we have been looking at?
I'm pretty sure. Just based on the tape and the design and stuff. Can we zoom in there?
So is it the Hungry Hippo that is going to fly, or it's another Hungry Hippo that they're just... Yeah. By the way, it looks like we are going to be getting an interview with Sir Peter Beck, so we can ask him all these questions. But I'm very curious why things are in New Zealand.
Mm-hmm. I'd imagine just for like testings for Sir Peter Beck to be like hands-on with it rather than having to fly to the States every time he needs to make a slight tweak to Neutron. But yeah, maybe this is Neutron 1.
He
We've been
just
talking
takes
about
his
this
rocket
briefly.
bike to this factory and then he tinkers and then
Yeah.
he goes back.
Takes no time at all.
Yeah.
So they continue testing avionics, GNC, and mission operations. Testing the Archimedes. Development on the return on investment, the return barge. This is something we got to talk to Adam about in particular. It's going to cost about $40 million to size this bad boy up. Can't wait to see that. LC3 ready for liftoff. They officially opened Neutron's test and launch site in Q3 2025 in Wallops, providing launch site diversity and assured access to space for America. LC3 is now undergoing final commissioning activities before receiving and testing Neutron flight hardware on the launch mount. All right, financial highlights and outlook. Revenue increased 48% or $50.3 million year over year, driven by an increase in launches from 3 to 4, as well as growth in both our satellite manufacturing and satellite component business. Sequential revenue increase of 7.3% quarter over quarter or $10.6 million, driven by an increase in our satellite manufacturing business paired with our growth in our components business, in particular our solar and optical systems business units. Year over year gross margins increased. The year-over-year gross margin increase was driven by an increase in Electron fixed cost absorption due to increased launch cadence and increased average selling price, paired with a favorable product mix within our space systems business. Quarter over quarter, Q3 gross margin increase was driven primarily by a one-time benefit from the transition to overtime revenue accounting for certain Haste missions, paired with a 100% margin launch cancellation fee. Gonna have to zoom in on that one a little bit later. That's interesting.
Yeah, he means that there is a fee that if you cancel, like I guess it was sold with like you have to pay 500,000 extra if you want to cancel the ride, and then that's like 100% margin. It's like an insurance that the government can say like, you know what, we don't want to launch, and then they don't need to pay anything.
Okay, so it sounds like going forward though, there was we shouldn't have that like. There was a one-time benefit in Q3 that we shouldn't expect going forward. So that kind of translates in my mind to maybe Q4 margins aren't quite as nice, but even still, like if we look at
they guided for very nice margins earlier.
Oh, still okay, yeah.
I don't even know what this means. This transition to overtime revenue accounting.
Yeah, that might be something we have to ask about because I'm curious what the implications of that are going forward, and maybe we can see in the 10Q what exactly that details. All right, so looking into backlog, sitting at 1.1 billion, that's quite a bit higher. That's a lot higher actually. I wonder how much of that is from Geost. Sequential rebalancing and backlog mix as healthy launch bookings continue, offset by another strong quarter of space systems revenue recognition. We expect approximately 50% of our Q3 and our ending Q3 backlog to be recognized within 12 months, with the remaining 43% to be recognized beyond 12 months. Healthy pipeline, including multi-launch deals and large satellite manufacturing contracts, can create lumpiness in backlog growth given the size and complexities of these opportunities. So I wonder where all of that growth came from. It's 47 to 53. That's surprisingly high. Love that. Review of operating expenses. GAAP and non-GAAP SG&A increased primarily due to the acquisition of Geost within the quarter, paired with increased legal expenses, insurance renewals, and expenses related to our annual proxy statement. GAAP and non-GAAP R&D expense increased due to a step up in Neutron development spending, in particular propulsion as we continue increase testing cadence. Am I misreading that? Anyways, testing the Archimedes engine and composite structures and related logistics expenses for final testing and integration. Okay. I'm curious with the I guess additional 6 months, we'll call it, if Neutron is going, like, if we're going to see that spend start to come down a little bit, because I mean the launch site's built. I wonder what that looks like going forward.
Yeah, I mean you have all the employees as well, though.
True.
Yeah.
All right, so EPS, non-GAAP, free cash flow, and adjusted EBITDA. More than $1 billion in cash and cash equivalents, marketable securities, and restricted cash enables continued investment in strategic growth opportunities. Okay. So what are they highlighting here? Operating cash flow, purchases of property. Okay. So negative 23.5 million versus 23.2. Okay, so a significant improvement to GAAP. Or how are we doing for time before I continue? We got about 13 minutes. We're doing fine. Significant improvement to GAAP EPS, primarily due to the partial release of the valuation allowance against our corporate deferred tax assets as a result of acquiring deferred tax liabilities related to the Geost acquisition's purchase price accounting. Purchases of property, equipment, and capitalized software increased 13.9 million sequentially to 45.9 million as we continue our Neutron infrastructure investments across the pad at LC3 at Wallops, our engine development center in Long Beach, California, and large composite structures at our facility in Middle River. Negative GAAP operating cash flow increased 300,000 sequentially, primarily driven by decreased cash receipts from our SDA satellite program. Increased cash consumption will continue due to Neutron development, long lead procurement for SDA, investment in subsequent Neutron tails, and related infrastructure to scale the business beyond our initial test flight. Adjusted EBITDA loss decreased 1.3 million sequentially due to a strong increase in revenue quarter over quarter paired with improved gross margin, partially offset by increased R&D expenses related to Neutron. All right, outlook. Q4 2025 revenue outlook, expect revenue range between 170 to 180 million. Expect year-on-year increases in both space systems and launch revenue. For GAAP and non-GAAP gross margins, expect the range between 37 to 39%. Wow. Driven by operating leverage and launch pricing improvement. So I guess that answers our question. Those margins are going to stay right where they are. Non-GAAP gross margin, we're looking closer to 43 to 45%. For GAAP and non-GAAP operating expense, we'll do GAAP 122 million to 128 million, and for non-GAAP 107 to 113. Finally, adjusted EBITDA. Actually, this is interest income, adjusted EBITDA, and shares outstanding. We have 3.5 million, 23 to 29 million, and 571 respectively. I'd imagine that is it. Oh, no. Okay, so we have Matt Ocko retiring as Rocket Lab board member. I think he sold I think this was the gentleman who sold a bunch of shares recently, had some people in a bit of a, a bit frantic, but it's largely due to this. Given his age, I assume he's just going to have some margaritas on the beach. Well deserved. So he's retiring from Rocket Lab's board on November 30th after more than 8 years serving the company. Thank you to Matt for his leadership, guidance, and support throughout Rocket Lab's evolution as a leading end-to-end space company. We have some upcoming investor events. And that is that. Gentlemen, what are our thoughts?
Firing on all cylinders. I was clearly wrong about my expectations, and they pulled the rabbit out of their hat. I mean, I'm actually really impressed that even with the Neutron delay, like the other parts of the business is doing so well that it's just, you can look past it and say that, yep, the company is doing amazing.
Mm-hmm.
Yeah, I think the Electron launches are expecting a lot out of 4Q. And so fingers crossed. I mean, we're already almost halfway through November. There's only been the one. How many launches has it been? Let me see.
2 so far in this quarter.
Yeah, two so far in this quarter. So, I mean, I think that in order to get that sort of revenue, I think they're aiming for easily another 5 more, because they're talking about 20 plus for the year, and we're at 16 at the moment. So, I mean, fingers crossed. I don't like to try to like pin them in a box, right? But I guess if you're talking about numbers and trying to figure out how fiscal year 25 is going to look, I mean, they're aiming for just under 600 million. And so if that's the case, then in order to meet that, you really need to get an additional, I would say, 4 or 5 launches from here to get to 6 to 7 launches or total in the quarter. And then coupling that with at least steady, if not slightly growing year over year space systems revenue as well. So it'll be interesting to see what actually comes through the pipeline. But I'm cautiously optimistic, and we'll see. I'm curious to see what the question and answer part of this looks like. But to me, I know a lot of people are being like, oh, well, every 6 months, they seem to delay it, 6 months. But at the end of the day, it seems like they're making really good progress. And to me, I'm just excited that there hasn't been any major showstoppers, right? Yes, of course, there's going to be small things that push it back 3 to 6 months every time. But there hasn't been something that to date has been a massive showstopper where they've had to recycle it for a year or 2 years. And so, fingers crossed that when we get to the fully system integration in 1Q, it looks like that things seem to be going in the right direction. But the thing I think I was most curious about, and I'm curious they're going to talk about on the call, was the gap EPS of only -3 cents. So I think that might be something. And I'm not into it. Said basically within the notes that it was about the Geost valuation release. So I'm not sure if that when they revalued, I guess, Geost, if that means that they're able to offset some of the other
Loss.
EPS issues but EPS losses. Thank you. So I'm kind of curious to see in the 10Q or any particular details in the press release if there's anything. So that's what I'm going to be looking at next.
Mm-hmm, mm-hmm. Very nice. And I like it to kind of pair with what you guys are saying too. I think that like it's one of those things where you can like really zoom in on reaction wheels or Electron or any individual parts, and they're like, sure, there's a bit of criticism with that when there's that big shiny object in the future like Neutron. But I think this is the kind of very important reason to keep an eye on those few things, because I think it's easy to look at this print and kind of be like, oh, well, shoot, Neutron's 6 months out still. This guy is falling, and that's that. But like to kind of what you guys are saying, it's just there's just so much going for Rocket Lab, especially when you compare it to like even a few years ago. The company that it was then compared to now is just night and day.
I mean, when they were awarded the Escapade contract, like that was so funny because I was watching, I think it was Blue Origin's webcast, and then they were like, NASA took a big flyer on this new startup company, and I was like, what are they talking about? Like a flyer on Rocket Lab? And then he was like, yeah, it was awarded in 2021. And then you look back like where the company was in 2021, and you're like, oh my God, yep. Like at that time, you didn't know how they're going to fund themselves. There was so many question marks about the company. So it's crazy how much we have grown.
It's crazy too, like that with Matt Ocko leaving the board. Like I'm looking back right now, it said what, eight years, right? So that's like he was there.
Is it just me, or there's like some music playing in the?
That's the earnings call, Vince.
Okay.
We might have to switch to yours too, Vince, by the way, for that call. I'm not sure how that would work. We got 5 minutes for the call.
Yeah, I can get that going.
Oh, right. Sorry, Matt. You're the host. My bad.
Yeah, I can switch to that. I'll put it on mute for now until... Well, actually, no, I won't. I'll just keep it going in the background, so when it actually moves over, I can move it. Interesting. I think the thing that bothers me most for this at the moment, one, of course, we'd all like to see Neutron launching in 2025, but some more clarity around maybe the share count expanding above 570 million. I mean, that's a pretty big jump, and I'm not sure if they'll kind of relate that a little bit. I mean, to date, in the first 9 months, they've gotten over $850 million to the balance sheet, which obviously is helping with acquisitions. It's helping fund things. So I'm really curious to see, is this the last of the share dilution we're going to see, other than like the normal? I was kind of anticipating a 2 to 3% run rate of dilution, but this is like 2.5% on its own, right? So I'm kind of curious where this kind of ends up in the coming years in terms of future dilution as a whole. But I mean, to have 800 some million on the balance sheet, if not over now $1 billion in cash on hand, is it worth diluting by 10%? I think so, and get to where you need to. But the thing that I didn't also see, which I get because of focus, I'm wanting to know more about Constellation, because I'm confident with where we're at with Neutron and what valuation we can get with a Neutron. What I'm still trying to understand is, where is Constellation going to feed into this? We know that Neutron is a catalyst and an enabler to get us to space, but the real potential for the company is Flatelites and in our own internal constellation. So I'm really just trying to understand a little bit more about that.
Mm-hmm. I wonder too if the 10Q is out, because if so, then we could actually probably look into that. We do only have a couple minutes here, but I'm wondering if there is any sort of insight we can get into that.
I'm also curious about like the spend going forward on Neutron. Like, does it mean that then we're going to be passing the 300 million budget and now we're going to land on 400 million? Is it out?
No, I'm just looking through the 10Q. Or sorry, the 10Q is out. Yeah, the call hasn't started, but I wonder if you can just search ATM insurance. Proceeds from ATM equity offerings. So this is going to be for the full, or for the 9 months. Proceeds 865. And I wonder if we could cross-reference that ATM. So they had, for the first half of the year, 396. So 396 to 865. What is that? Over 400? 470, give or take. Does that sound about right?
470. What do you mean? Sorry, you lost me.
That was recognized in the third quarter here.
Oh.
I almost got the actual number here. One sec. No, I did something wrong along the way. Anyway, should be around 400 million that was recognized from that ATM. So that's, I think, the bulk of that ATM, the updated version of it. Oh no, my bad. So sorry, the new one was 750. I was thinking it went 250 to 500 for the ATM. Because we had that original one for 500, and then the new one was 750. So anyways, it seems like the bulk of it is tapped into. So I think that's a lot where the cash is coming from. The uptick in cash, I mean.
All right, I think here we go.
Cool.
Where are we at? Where is it? Yeah.
Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on a touch-tone phone. To withdraw your question, please press star, then 2. Please note this event is being recorded. I would now like to turn the conference over to Murielle Baker, Director of Corporate and Launch Communications. Please go ahead.
Thank you. Hello and welcome to today's conference call to discuss Rocket Lab's third quarter 2025 financial results, business highlights, and other updates. Before we begin the call, I'd like to remind you that our remarks may contain forward-looking statements that relate to the future performance of the company, and these statements are intended to qualify for the safe harbor protection from liability established by the Private Securities Litigation Reform Act. Any such statements are not guarantees of future performance, and factors that could influence our results are highlighted in today's press release, and others are contained in our filings with the Securities and Exchange Commission. Such statements are based upon information available to the company as of the date hereof and are subject to change for future developments. Except as required by law, the company does not undertake any obligation to update these statements. Our remarks and press release today also contain non-GAAP financial measures within the meaning of Regulation G enacted by the SEC. Included in such release and our supplemental materials are reconciliations of these historical non-GAAP financial measures to the comparable financial measures calculated in accordance with GAAP. This call is also being webcast with a supporting presentation, and a replay and copy of the presentation will be available on our website. Our speakers today are Rocket Lab founder and Chief Executive Officer Sir Peter Beck, as well as Chief Financial Officer Adam Spice. They will be discussing key business highlights, including updates on our launch and space systems programs. And we will discuss financial highlights and outlook before we finish by taking questions. So with that, let me turn the call over to Sir Peter.
Thanks, Muriel, and thanks everybody for joining us today. It was another record-breaking quarter for Rocket Lab. We're up 48% year on year with $155 million in revenue and strong gross margins as well. This is the second time in a row we've delivered record-breaking growth quarter by quarter, once again demonstrating our relentless execution. Electron demand is accelerating faster than ever before, and the momentum continues to build with our largest launch contract backlog yet, with 49 launches on contract. We've just launched our 16th mission this year, equaling last year's launch record, and we've got another launch scheduled in the coming days that will take us to 17, with more to come, and a new precedent set for Electron annual launch cadence, and we see this precedent continue in 2026 as well. Amazing performance is also the theme across our space systems groups. Our twin spacecraft for NASA Mars mission are integrated onto its launch vehicle and are ready for liftoff in Cape Canaveral in the coming days. And for Neutron, we've got a full update to share on our progress to the pad following the official opening of the Launch Complex 3 in August, ticking off a critical milestone in the program. We'll share more detail about that in the upcoming slides. So before we get into it, I want to zoom out and talk about our performance over the last 5 years, given this is sort of a little bit of a wrap-up for the year in some respects. Execution and reliability are critical in the space industry, but even more so in the public markets. And our ability to consistently deliver results for our customers, expand our capabilities, and grow our revenue and gross margins really sets us apart in the sector as we set new benchmarks for operational and financial success. From $35 million in revenue just 5 years ago to our implied full-year guidance of roughly $600 million at the midpoint, an approximately 1,600% increase over that time period. And our gross margins are looking great too, from negative 34% GAAP gross margin in 2020 to the midpoint of our implied full-year guidance of slightly over 34% positive in 2025, and looking great to exit 25 with an even higher 37 to 39% in the fourth quarter. Our position as a leading end-to-end space company has never been stronger. We're a trusted disruptor of the industry, and we're proving that we can move quickly to scale our products and our services across both launch and space systems. And that focus is translating into the double-digit growth results you're seeing on the page here. Right, on to Electron. So as the title says, it's been a record-breaking quarter for launch contracts. 17 dedicated launches were signed in just 3 months, but all but 2 of them were signed with international customers from Japan, Korea, and Europe. Those new missions, plus the ones already on the books for international space agencies like ESA and JAXA, prove Electron is not just a leading launch vehicle in the United States, but it's becoming the preferred small launch vehicle globally. Electron's business model is one of schedule flexibility for our customers, and you can see from these new bookings, demand is stronger and growing for Electron. For Haste, our hypersonic test vehicle continues to redefine the way technology is being developed and tested in the United States. In Q3, we launched back-to-back missions from Launch Complex 2 in Virginia with 100% mission success, enabling technology to be tested in real-life hypersonic environments, which is a critical capability for the next generation defense programs like Golden Dome. By leveraging our commercial speed, our vertical integration, and our execution history with Electron, Haste delivers the proven agility and responsiveness that these programs demand. Speaking of momentum, we're on track to fly our 17th launch of the year in the next few days, which will officially surpass our previous annual launch record set in 2024. This pace is only possible because we are very intentional about designing Electron for scale. This extends beyond the vehicle itself to all the supporting infrastructure like manufacturing, processing, and operating our high-volume launch range infrastructure as well. It's an important approach that we're deploying for Neutron 2, ensuring that we're thinking well beyond first flight. As of right now, there are only 3 American commercial launch providers who have launched to orbit more than once this year, SpaceX, ULA, and of course us, which really does highlight just how rare Electron's capabilities are. Now let's turn to space systems. Starting off with a little bit of an update for M&A for the quarter. We closed the GEOS deal to create a new payloads business unit, strengthening our offering as a prime contractor for national security programs like Golden Dome and for the Space Development Agency. With our history and expertise in buying and expanding smaller shops to meet industry demand, we're turning our attention now to scaling our new electro-optical and infrared sensors for lucrative future contracts. We're also closer to acquiring laser communications company Mynaric. They've completed their financial restructure under German law in August, which was a pivotal moment in the acquisition process and one that brings us nearer to closing out this deal. Rocket Lab has been a force multiplier for the US space industry, and we're ready to bring that same energy to the European space sector with our first European foothold and expansion into Germany. As for what's next, we've built up our dry powder for future M&A with more than $1 billion in liquidity following our at-the-market offering program implemented in September. It was a very strategic move to lock in capital that will allow us to act quickly on some of the exciting opportunities in the pipeline. We're not ready to reveal the details of these strategic plays just yet, but I can assure you that the pipeline is active. We've always taken a disciplined approach to acquisitions, and our successful track record speaks for itself. We've got a bit of a knack for identifying, acquiring, and then integrating businesses that enhance our end-to-end capabilities and make us a stronger competitor for large-scale programs. And that's made us the consolidator of choice for many companies in the space sector. We're often the ones being approached first by companies wanting to join Rocket Lab now because they see the value we create for growth and innovation. On to our upcoming space systems missions. We're a few days away from 2 of our spacecraft launching for the Escapade mission. The initial launch attempt was unfortunately scrubbed by the launch provider yesterday. But by this time Wednesday, they're scheduled to be launched from Cape Canaveral, and they'll be on their way to Mars. Now, what makes this mission truly groundbreaking is that we're tackling these interplanetary challenges with spacecraft built for an order of magnitude less than the usual cost, developed in about 1/3 of the time. We're proving an entirely new, more accessible model for sending satellites to other planets. In short, this mission is a tough one, both in flight and in the design, but of course we love a challenge. Another program with a big green tick this quarter is our Transport Layer constellation for the Space Development Agency, which has cleared critical design review to be able to move it into spacecraft production now. While existing and fully funded contracts like a $500 million program can continue under the government shutdown, the situation does continue to have an impact on the timing of new awards for the SDA Tranche 3 constellation. Neutron, all right. Moving on from space systems, let me give you a bit of an update for Neutron for the quarter. Now, I've spent a lot of my time in the recent weeks elbow to elbow with the teams at the various sites for Neutron testing. And I have to say I'm extremely happy with the progress, but more than that, the thoroughness of the team during this critical qualification and acceptance testing phase. We're into the big meaty bits and the meaty tests where we have whole systems integrated together and large sub-assemblies. This is the time when you find out on the ground what you got right and what you got wrong, and of course, rather than finding out that during first launch. Now, at Rocket Lab, we have a proven process for delivering and developing complex space flight hardware. And I think that process speaks for itself with respect to our hardware always looking beautiful and, more importantly, always working beautifully. Now, our process is meticulous, but it works. Take Electron, for example. It's the world's most frequently launched small launch vehicle, as we all know. And, we scaled the production and launch of it faster than any other commercial launch vehicle in history, which is great. But if we think about how many others have tried to develop a launcher, the results have been extremely poor. Those who have failed to deliver are numerous. Basically, every new space company except Rocket Lab and SpaceX has failed to build an orbital rocket that is scaled to any kind of launch cadence and is reliable. Now, this is the Rocket Lab process in action, and I've been resolute about sticking to this approach. Now, with all the hardware in front of us now and significant testing programs underway across all parts of the vehicle, we can see we need a little bit more time to retire the risks and stick to the Rocket Lab process. Yep, it might mean things will take a little bit longer, but I want to give some context here. I mean, the labor cost for the program is about $15 a quarter, which we make back 4 times, over a single launch anyway. So it makes 0 sense to change what we know and what is proven to work. So we're aiming to get to Neutron to the pad in Q1 next year, if all goes well, with the first launch thereafter. Once again, though, that's provided that myself and the team are confident we have completed Neutron's qual testing and acceptance testing program to the Rocket Lab standard. As always, this is a rocket program, so that's been completed at a pace and a cost that nobody has achieved before, and the financial and long-term impacts are insignificant to take a little bit more time to get it right. Now, we've set high expectations for Neutron's first flight. Our aim is to make it to orbit on the first try. You won't see us minimizing some qualifier about us just clearing the pad and claiming success and whatnot. And that means that we don't want to learn something during Neutron's first flight that could be learned on the ground during the testing phase. Excuse me. At the end of the day, Neutron will fly when we're very confident it's ready, and we're not going to break the mold of the Rocket Lab magic. Now, over the next few slides, I want to take you through some of the testing campaigns we've been running to paint a bit of a picture of what it takes to deliver a reliable rocket to the launch pad. As you've seen for some time, we're very hardware rich across the entire vehicle. Now it's all in sort of assembly and qualification and acceptance testing before it's all brought together under the East Coast sites. Okay, so these pictures are just a snapshot of many of those activities. We're deep diving into the qualification, test, and acceptance of every major assembly, sub-assembly, and system before we get into launch operations. In fact, I'd say we're putting Neutron through an even more extensive barrage of testings than we did Electron, because it's not your kind of conventional rocket that we're developing. We have a couple of novel things, being the world first architecture like the Hungry Hippo fairing, suspended second stage, and the vehicle itself is let's not forget, is the world's largest flying carbon composite structure ever built. So we're making tremendous progress in these structures, testing across all levels of the vehicle. Every one of Neutron's major structures are tested on the ground to the levels that exceed what the rocket may see in flight. This includes testing of our primary structures like propellant tanks, thrust structures, the interstage, pushing them all to their limits to ensure they meet the demands of launch and reusability. Before we can call these qualified, we go through a full run of load cases like axial, lateral, torsional, transient, and combined loads. The main and primary structures must withstand a liftoff of 1.5 million pounds of thrust from the Archimedes engines. The worst cases of aerodynamic loading on the way up as the vehicle goes through max Q, and all the separation loads. And then for the structures that come back on stage 1, they have to survive all the thermal and aerodynamic re-entry loads too. Now we test secondary and auxiliary systems to the same level of scrutiny as well. This involves pulling and pushing across the same load cases, even down to the smallest fixtures and the smallest bracket that holds every device in Neutron's primary structure. Our tests across both stage 1 and 2 structures have yielded a wealth of valuable data, and by anchoring and validating our engineering models through these tests, we're able to uncover and retire technical risks on the ground well before we fly. With Neutron's reusable fixed fairing design and our suspended second stage that passes through it, we're working with a unique architecture that's never been seen on a rocket before. And we've been taking it through its paces to ready the entire system for its first flight. This has included testing the Hungry Hippo's aerodynamic control surfaces, as well as turning the electromechanical actuators and the control systems and all the entire mechanisms. The Hungry Hippo's open and closed systems have passed performance testing, and so has the staging system's pneumatic locks and pushers and guides and all of the stuff that's inside of second stage that passes through the Hungry Hippo's mouth. Well, it's been one thing to build these huge assemblies for Flight 1. The team has also set up the infrastructure for this testing that allows us to get as close as to a flight test as we possibly can on the ground. And this is important because it also lays the foundations not just for the first launch, but flights 2 and beyond. You can see some of the giant towers in these staging tests on the right-hand side of the slide there. In fact, some people thought we were building a launch site. It was so big. In the Neutron flight software and GNC team, we've been flying to orbit virtually almost now for 2 years, leveraging our proven approach from the Electron program with our own flight software and hardware in the loop testing that integrates physical components with simulated flight environments to validate system-level functionality and performance. In preparation for Neutron's first flight, our operators and engineers have been running virtual test and launch operations week in, week out. We've been exercising our operations team on console, going through static fire operations and launch day operations so that we can hit the ground running when the vehicle arrives at Launch Complex 3. Our world-class simulation tools built in-house allow us to exercise our avionics, GNC, and software tools well in advance of conducting these operations with a fully integrated vehicle. This not only allows us to reduce risk, but also serves as a training platform for our operations team. Combine that with a full suite of vehicle avionics in the loop, and we bring Test Like You Fly to a whole new level. It's all part of the smart, rigorous approach that we apply to every program and mission. On to Archimedes. Since the last engine update, the propulsion team has continued to validate its performance across the entire run box. The upstage engine's on the test stand too, and we continue to work for all the qualification testings on these engines and test as you fly configurations as you know. The test cell is operating at a 27 rate, meaning 20 hours a day, 7 days a week. The only way you can get through years of qualification, always expected for an engine program, is to squeeze years of hours into months. So as you can imagine, no weekends or evenings are left on the table at the Stennis test facility. Now onto our ocean recovery platform for Neutron. While return on investment barge won't be used for the first flight, the recovery team is making great progress on having it ready for Flight 2. The 3 main propulsion generating sets for the 400-foot length barge recently passed factory acceptance testing and have been cleared to be sent to the shipyard in Louisiana. Each of return on investment's 3 diesel electric gen sets are capable of more than 3 megawatts of electrical power. Combined, that's more than 2.5 times the total electricity capacity for all of Launch Complex 3. So these things are big. All in all, return on investment is looking good to enter service next year for the second launch. Okay, finally, to wrap up our progress, it was a great moment to be able to cut the ribbon at the launch site last quarter. Neutron will bring the largest lift capacity to the Mid-Atlantic regional spaceport has ever seen. So opening it was an important milestone, not only for the path to first launch, but for the assured access to space that the nation needs as launch congestion continues to build up across the country. The team is running through the final activation as they prepare to receive Neutron on the launch mount, but otherwise all ready to go. Most recent tests have included flowing cryogens through propellant systems, and tests continue to run smoothly. We've designed the site to be able to turn missions within 24 hours. That was the design requirement. Now that's important for responsive space and the launch cadence we expect for the vehicle. But equally so, we can get Neutron straight into back-to-back testing during the launch and readiness campaigns as well. So you can see there's been lots of Neutron activity this quarter. The team has made significant progress towards Neutron's first launch, while continuing to prioritize our very rigorous testing and qualification processes over rushing to the pad. We've seen what happens when others rush to the pad with an unproven product, and we just refuse to do that. Our methodical and deep approach to qualification is what's driven our reputation for success and reliability in the industry. It's been a cornerstone of our success with Electron, and it's the same philosophy that we'll be applying to Neutron. Okay, here's Adam with the financial highlights for the quarter and our outlook ahead for Q4.
Great, thanks, Pete. Third quarter 2025 revenue was a record $155 million, coming in at the high end of our prior guidance range and representing an impressive year-over-year growth of 48%. This strong performance was driven by significant contributions from both our business segments. Sequentially, revenue increased by 7.3%, underscoring the continued momentum across the business. Our Space Systems segment delivered $114.2 million in revenue in the quarter, reflecting a sequential increase of 16.7%. This growth was primarily driven by increased contribution from our satellite manufacturing business, which continues to perform exceptionally well and provides comforting diversification alongside a robust but at times lumpy launch business. Meanwhile, our Launch Services segment generated $40.9 million in revenue, representing a 12.3% quarter-over-quarter decline due to fewer launches during the period, driven primarily by customer spacecraft delivery delays. We have a busy Q4 manifest, and as a result, expect a strong return to sequential revenue growth in our launch business in the fourth quarter. Now turning to gross margin. GAAP gross margin for the third quarter was 37%, at the high end of our prior guidance range of 35% to 37%. Non-GAAP gross margin for the third quarter was 41.9%, which was above our prior guidance range of 39% to 41%. The sequential improvement in gross margins was primarily driven by a one-time benefit from the transition to overtime revenue recognition for certain Haste missions, paired with revenue recognition of an Electron mission cancellation due to a customer's internal program cancellation, which was recognized at 100% margin. We ended Q3 with production-related headcount of 1,198, up 48 from the prior quarter. Turning to backlog. We ended Q3 2025 with approximately $1.1 billion in total backlog, with launch backlog accounting for approximately 47% and Space Systems representing 53%. During the quarter, launch backlog contributed to gain share, supported by strong underlying trends as we convert a robust pipeline of opportunities across Electron and Haste. This includes the 17 Electron bookings signed within the quarter that Pete mentioned earlier. While Space Systems bookings remain inherently lumpy due to the timing of increasingly larger and high-impact program opportunities, Space Systems backlog continues to hold at healthy levels despite the step-up in revenue run rate recognized over the last few quarters. We're actively cultivating a strong pipeline that includes multi-launch agreements and large satellite manufacturing contracts across government and commercial programs. As noted earlier, these larger needle-moving opportunities can introduce lumpiness in backlog growth, but they are critical drivers of long-term value and scale for the business. Looking ahead, we expect approximately 57% of our current backlog to convert into revenue within the next 12 months. Additionally, we continue to benefit from relatively quick turns business across launch and Space Systems components businesses that drive incremental top-line contribution beyond the current 12-month backlog conversion. Turning to operating expenses. GAAP operating expenses for the third quarter of 2025 were $116.3 million, above our guidance range of $104 to $109 million. Non-GAAP operating expenses for the third quarter were $98.1 million, which was also above our guidance range of $86 to $91 million. The sequential increases in both GAAP and non-GAAP operating expenses were primarily driven by continued growth in prototype and headcount-related spending to support our Neutron development program. Specifically, investments ramped up in propulsion as we continue to qualify Archimedes, as well as in test and integration of mechanical and composite structures at our facility in Middle River, Maryland. In R&D specifically, GAAP expenses increased $4.6 million quarter over quarter, while non-GAAP expenses rose $4.8 million. These increases were driven by the ramp-up of Archimedes production, along with higher expenditures related to mechanical systems and composites, as just mentioned. Q3 R&D headcount was 1,019, representing an increase of 84 from the prior quarter, In SG&A, GAAP expenses increased $5.7 million quarter-over-quarter, while non-GAAP expenses rose $6.4 million quarter-over-quarter. These increases were primarily due to the acquisition of Geos during the quarter, paired with higher legal expenditures, insurance renewals, and fees associated with our annual proxy statement and related filings. Q3 ending SG&A headcount was 385, representing an increase of 42 from the prior quarter, with the majority of those coming from the closing of the Geos acquisition. In summary, total headcount at the end of the third quarter was 2,602, up 174 heads from the prior quarter. Turning to cash. Purchases of property, equipment, and capitalized software licenses were $45.9 million for the third quarter of 2025, an increase of $13.9 million from the $32 million in the second quarter. This increase reflects ongoing investments in Neutron development as we continue testing and integrating large structures at our facility in Middle River, expanding capabilities at the engine test stand in Stennis, Mississippi, and scaling additive manufacturing at our engine development center in Long Beach. As we progress towards Neutron's first flight, we expect capital expenditures to remain elevated as we invest in testing, production scaling, and infrastructure expansion. GAAP EPS for the third quarter was a loss of 3 cents per share, compared to a loss of 13 cents per share in the second quarter. The sequential improvement to GAAP EPS is mostly attributable to the $41 million tax benefit we recorded during the third quarter, which is due to the partial release of the valuation allowance against our corporate deferred tax assets, as a result of acquiring an equal amount of deferred tax liabilities emanating from the Geos acquisition's purchase price accounting. GAAP operating cash flows was a use of $23.5 million in the third quarter of 2025, compared to $23.2 million in the second quarter. Similar to the capital expenditure dynamics mentioned earlier, cash consumption will remain elevated due to Neutron development, longer lead production for SDA, investments in subsequent Neutron tail production, and infrastructure expansion to scale the business beyond the initial test flight. Overall, non-GAAP free cash flow, defined as GAAP operating cash flow, less purchases of property, equipment, and capital software, in the third quarter of 2025 was a use of $69.4 million, compared to a use of $55.3 million in the second quarter. The ending balance of cash, cash equivalents, restricted cash, and marketable securities was just over $1 billion at the end of the third quarter. The sequential increase in liquidity was driven by proceeds from the sale of our common stock under our at-the-market equity offering program, which generated $468.8 million during the quarter. These funds are intended to support acquisitions such as the announced Mynaric acquisition, as well as other targets in our robust M&A pipeline, alongside general corporate expenditures and working capital. We exit Q3 in a strong position to execute on both organic and inorganic growth initiatives and to further vertically integrate our supply chain, expand strategic capabilities, and grow our addressable market, consistent with what we have done successfully in the past. Adjusted EBITDA loss for the third quarter of 2025 was $26.3 million, which was below our guidance range of $21 to $23 million loss. The sequential increase of $1.3 million in adjusted EBITDA loss was driven by higher revenue and improved gross margin, which was more than offset by increased operating expenses related to Neutron development. With that, let's turn to our guidance for the fourth quarter of 2025. We expect revenue in the fourth quarter to range between $170 and $180 million, representing 12.8% quarter-on-quarter revenue growth at the midpoint. We anticipate further improvement in both GAAP and non-GAAP gross margins in the fourth quarter, with GAAP gross margins to range between 37% to 39% and non-GAAP gross margin to range between 43% to 45%. These forecasted GAAP and non-GAAP gross margins are benefited by a higher mix of launch contribution in the quarter, as well as underlying improvements in launch ASPs and greater launch overhead absorption due to higher forecasted launch cadence in the quarter. We expect fourth quarter GAAP operating expenses to range between $122 and $128 million, and non-GAAP operating expenses to range between $107 and $103 million. The quarter-over-quarter increases are primarily driven by ongoing Neutron development and spending related to Flight 1, including staff costs, prototyping, and materials. However, we expect to see a shift in spending from R&D to flight to inventory, which is an encouraging sign of progress as we move closer to Neutron's first flight. I'm optimistic that with the impressive strides we've made towards this milestone, we're approaching peak Neutron R&D spending and are on the path towards meaningful operating leverage and positive cash flow in the future. We expect fourth quarter GAAP and non-GAAP net interest income to be $3.5 million, which is a function of higher cash balances, as well as the conversion of approximately $192 million of convertible notes since September 30th. We expect fourth quarter adjusted EBITDA loss to range between $23 million and $29 million, and basic weighted average common shares outstanding to be approximately 571 million shares, which includes convertible preferred shares of approximately 46 million and reflects the conversion of approximately 37 million shares from convertible notes thus far in Q4. Lastly, consistent with prior quarters, we expect negative non-GAAP free cash flow in the fourth quarter to remain at elevated levels, driven by ongoing investments in Neutron development and scaling production. This excludes any potential offsetting effects from financing under our ATM facility. And with that, we'll hand the call over to the operator for questions.
We will now begin the question and answer session. To ask a question, you may press star, then 1 on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed and you would like to withdraw your question, please press star, then 2. At this time, we will pause momentarily to assemble our roster. The first question today comes from Ryan Koontz with Needham & Co. Please go ahead.
Great, thank you. Really nice to see the strong bookings and backlog jump there for launch. Really impressive. Sounds like a lot of that was international. Any particular color you can share on, the use cases, defense versus government? Anything you can share as far as what's really driving that pickup in backlog and how you feel about it, going forward over the next few quarters?
Yeah, hey Ryan, thanks very much. Yeah, so it's a bit of both. So strong commercial bookings, but also, for the first time we see, space agencies who typically, go to the first stop is to go and use their own sovereign capabilities, but Electron is really the only vehicle of its kind in operating in the world right now. So it was very, very promising to see space agencies now kind of standardizing on the Electron as a platform.
For sure, that's great. And how are you feeling about supply chain relative to meeting that kind of demand for Electron at this point?
Electron's like 90% plus built in house, so we don't see too many challenges there. The factory that we built here was ultimately designed to build 52 rockets a year, and so I think we'll be fine.
That's great. Maybe one last one just to wrap up, just to clarify what Adam said about launch gross margins. There was a couple of one-time events there. Any color you can share with us on that, Adam?
Yeah, as Electron continues to kind of mature as a business, we've got that deep pipeline and backlog, and you're going to have customers that have changing priorities. Programs get canceled. Fortunately, we have very strong contract terms, which allow us to make sure that we're protected in the event that programs get canceled or change their priorities. I think on the Haste change, that was really kind of, again, a pivot on some of the Haste missions where the contractual terms are such where it's really more appropriate under ASC 606 to recognize revenue over time and use EAC accounting to measure the cost that you're incurring, and you recognize revenue and margin accordingly. So we now have a mix in that business where you have point in time and overtime, and it really is just a function of contract terms. And Haste is evolving into an important and meaningful part of our business. A lot of good things come from that. The fact that you've got typically higher ASPs, you've got, I would say, along with that, now you've got a little bit more stability, I would say, or predictability to the revenue contribution from that, given the fact that, again, some are going to be point in time, but some are going to be overtime, and that overtime allows a little bit more of I would say, like a little bit more predictability, and I think it's a healthy place to be.
That's great. Appreciate the questions. Thank you.
The next question comes from Andre Shepard with Cantor Fitzgerald. Please go ahead.
Hey everyone, good afternoon, and thanks for taking our questions. And Pete, it really is great to hear all the great progress over the last few years to see everything up until this point. Two quick questions for us, one on space systems and one on launch business. On the space systems, maybe for Adam, can you remind us the revenue recognition associated with the SDA Tranche 2 award? I think in the past you had targeted 40% revenue recognition in 2026. Just wondering if that's on track or unchanged. And then also on the SDA Tranche 3 award, now obviously the government shutdown has maybe delayed the decision there slightly, but do we still feel confident in that award and in that decision? You know, if awarded, that would be the largest contract I think awarded in company history. So curious on your thoughts there. Thank you.
Yeah, I'll take the first piece on RevRec. I'll give you my thoughts on T3, and then I'll hand it back over to Pete. But on the RevRec, yeah, I mean, we're still very much in that path of recognizing the revenue over that pattern where it was, you know, kind of think about these larger long-lived government programs as kind of 10% in you know, kind of in the first year after you achieve award, and then it's 40, 40, 10. So think about that as the shape of the curve. And SDA's got a Tranche 2 transport layer shaping up to be similar to that. So yeah, everything is consistent there. And as you know, similar to the other overtime RevRec, you basically estimate your cost to complete the mission. As you incur costs, proportionately, you recognize revenue at the program margin. And so, yeah, so far that program has been going very well. As Pete mentioned, that part of the business is performing very, very well. On T3, you know, yes, that would be the largest contract the company would have won to date. And you're right, the timing has been a little bit delayed due to the government shutdown. I think we've all seen recently that there's signs that, you know, perhaps we could be coming to an end of that shutdown, which I think would be great to get that momentum back in the awarding of those types of contracts. But I'll turn over to Pete with regards to confidence in that win.
Yeah, I think you've said it well, Adam. I mean, I think you know, we've put ourselves in a really strong position as a prime contractor on those awards, especially with some of our acquisitions. So we're feeling good, and you know, we just need the government to come back and you know, finish off that last little piece. But no, I think we're feeling good, Andre.
Wonderful. That's great to hear. And maybe just as a quick follow-up on Neutron, you know, with the first launch now targeted for early next year, should we still be assuming kind of 3 launches for next year, 5 the following year, and 7, or is there perhaps a change to that cadence as well? Thank you.
Yeah, the way we think about that cadence is it's, you know, the clock starts for the next one from the first one. So depending on the, you know, the first flight, think of it as like a 12-month kind of rate from there. But maybe Adam, if you had any different views.
Yeah, no, I think that's right. I think, you know, I just remind folks that, you know, the first launch is a test launch. It's an R&D launch. We've been expensing that vehicle over its manufacturing period. So the previously communicated cadence was, you know, 1 test launch, which is still the case, and then we expect to be, you know, in revenue for the flights thereafter. So I would say that, you know, depending how early we get the test launch off in 2026 will dictate whether or not we get, as Pete said, we kind of complete the next 3 missions in a 12-month window that would fall within that.
Wonderful. Very helpful. And congrats again. I'll pass it on.
The next question comes from Edison Yu from Deutsche Bank. Please go ahead.
Hey, good afternoon. Wanted to ask about the future constellation. I know it's quite a long-term question, but there's been a lot of activity in some operators around spectrum, and I'm curious, what's your thinking about the value of spectrum in your kind of calculus for any type of future constellation?
Well, I mean, that would be making an assumption that I guess you were settling on a comms application as well. But you know, clearly spectrum is an important element. to any kind of scaled comms business. Although we have been seeing some interesting approaches where that becomes less so. But I think you're just seeing some kind of natural consolidation in the industry right now around some of those spectrum assets, and that, I suspect that will continue. But look, Rocket Lab's not going to go out and buy billions of dollars worth of spectrum speculatively. That's for sure.
Hey Pete, sorry, this is Adam. Sorry, I got dropped. Unfortunately, the conference call dropped me. So I don't know, but did I answer your question fully, Andre, on the launch cadence?
Hey, actually, Edison on now.
Oh,
yeah, we did.
Sorry. Okay, thank you.
It's nice to see that you got dropped, Adam, this time and not me.
It's not discriminating for sure. Yep.
So totally separate topic. Wanted to ask about. I'm sure everyone has seen, NASA. We got Isaacman, seemingly back. Do you see increased opportunities in this type of changeover around whether it's Moon, Mars, space, and where do you think those incremental opportunities could potentially come from?
Short answer is yes. I think if Jared is cemented as the NASA administrator, I think if you look at Jared's approach to how he believes NASA should be run and the role that commercial entities like Rocket Lab will play, I think that bodes very well for the way that we operate and the value that we can bring the agency. So I would view that as a very positive thing for Rocket Lab.
Great, thank you.
The next question comes from Gautam Khanna with TD Cowen. Please go ahead.
Yeah, thanks. Good afternoon, guys. Was wondering if you could elaborate on how soon after Neutron arrives at the complex, realistically, it can launch? Is there a minimum interval of time? And then, what sort of explains that, whatever that range might be?
Hey guys, it's a little bit difficult to answer because it really depends on what you find. If we put the vehicle on the pad and we go through all of its fueling and detanking and all the operational tests and static hot fires and all of that sort of stuff, and it all flies through, then it's a fairly straightforward path. But if we go there and we find some stuff that we don't like, then we're going to fix it. And I think as I tried to explain during the call, there's the way that we develop these kinds of things is I'm suspicious if everything just flies through because that in some cases causes more time to be spent than less because generally you expect to see something because the whole vehicle is built on a safety factor of 1.1 or 1.2. So, you expect to see some things. And depending on the magnitude of those things, we won't just blindly walk past them. We'll go out and not only fix them, but really, really deeply understand how they occurred and then also go one step further and feed that back into all of our engineering models to make sure that, next time around, if we're doing a similar thing, that the ability to predict and the fineness of that becomes better and better and better. So, look, we know a lot more when we have a vehicle on the pad. We know even more when we hot fire it. After hot fire, if that's a successful campaign and we're happy with what we see, then the turnaround to launch after that point is pretty quick.
Okay, and I was curious also, maybe I missed it, but the cumulative catch-up adjustment or the one time, how large was it in the quarter?
Sorry, Gotham, what you're talking about, are you referring to the Haste? I'm not sure if you can maybe, sorry, I got dropped again from the call from my provider, but can you repeat the question?
No, I apologize. I think you mentioned in the remarks that there was I know in the queue it says there's a revenue adjustment of net $10 million favorable in the quarter. Wanted to know, I think you described the EBITDA margins were lifted by a contract closeout of some sort. I was just curious if you could quantify how large that was.
Yeah, so there was one contract closeout that was about, I think it was a little under $5 million. Was the value that we received when that cancellation occurred. And yeah, then there were some other things moving around with regards to there was a benefit to the gross margins as well, because in Q3, we recognized revenue with higher gross margin associated, because when we made the change in Q2, we ended up actually taking a margin hit because we recognized revenue without having associated, basically at zero margin, because at that time, we didn't have the ability to estimate what the costs were going to be to complete the mission as we did this transition. So the path was essentially revenue in Q2 at no margin. Q3, we got, again, normal amount of revenue from that overtime contract, but that was now at margin, right? So I think those are really kind of the two prior things. But when you look forward into Q4, given the guidance that we've provided, even with those things not recurring in Q4, you still see our gross margins improving. So you can just see that, yes, that was kind of a unique dynamic in the transition from Q2 to Q3, but from Q3 to Q4, without those unique events, we still show gross margin strength and growth sequentially.
Thanks very much, guys. Appreciate it.
The next question comes from Eric Rasmussen with Stifel. Please go ahead.
Yeah, thanks for taking the questions. I wanted to just on Neutron, I totally understand, Peter, in the team, how you guys operate. You're not looking at an iterative process and having things blow up. So that's great, and that you've always operated that way. But I wanted to see, though, with this latest push out, what does that do from a timing perspective for things like the NSSL and some other things that you might have been looking at that Neutron would obviously is geared towards?
Yeah, no, hey Eric, great question. So look, the NSSL team work shoulder to shoulder with us. They're on every review in the program, and obviously I can't speak for them, but I think they take at least the feedback we've had from them is they very much appreciate our approach of both transparency, but also the diligence, the way we build vehicles. So the awards for the NSSL contracts have not been made yet, and there's some time away for them to be made. We need to have a flight under our belt, a successful flight under our belt, before they'll make those awards anyway. So largely speaking, it's pretty irrelevant. And we've been very careful, and I think there's been a lot of conversation previously about booking Neutron and making sure that we can deliver for our customers. So long story short, we're not letting anybody down here, Eric. We're in a good spot.
Great. And maybe just my follow-up question here. You closed the GEOS acquisition. Mynaric is soon to close, I would presume. But with GEOS, are you seeing any traction in expanding the footprint in national security and defense? I mean, that was part of the reason. But what are you seeing now that you've closed the deal?
Yeah, it's night and day to before. So obviously we had a good relationship with SDA and to the intelligence community, obviously for launch and things like that. But I would just say we're in a totally different league now and working with totally different folks. And there's long relationships that have been built with the GEOS team, and now that they have the support of Rocket Lab, we're really able to expand and supercharge those, and also those relationships expose them to the larger offering of Rocket Lab, because it always surprises me. Sometimes people just think we're just this little launch company and don't have all this other capability. So no, it's been incredibly important, and also just now being a payload provider it just brings you up to a whole nother level, because you're having really detailed mission discussions rather than just talking about how you can provide a bus or a component or something. We're really in mission formulation territory.
Great. Thanks, and good luck with the Neutron development.
The next question comes from Michael Leshock with KeyBanc Capital Markets. Please go ahead.
Hey, good afternoon, everyone. I wanted to ask on Archimedes. I know you're constantly testing and iterating the engine, but how close are you to having a finalized design that meets all the performance requirements and ready for first flight? And then secondly, given your production cadence, I think you previously said a new engine was coming off the line every 11 days or so. How quickly can you ramp production of the engine to have 9 Archimedes for the first stage of Neutron's debut launch?
Yeah, so thanks, Michael. The engine design's pretty stable at this point, and we've met all the performance criteria. What we're doing is, obviously with Ascent, there's one set of environments, and with Descent, there's an entirely new set of environments, and much more challenging environments because your propellants are warm and lower pressures, and you've had outage mixing and all kinds of stuff. So going through all of those things has been really important. And I think the team, I got to check on the exact number, but I mean the vast majority of all of the components for Flight 1 engines are either complete or in some kind of form of build. So we're iterating on the engine for sure, but the production machine is stood up and ready to support. But with Archimedes, we want to make sure as we're ascending on first flight, like nobody is worried about an engine, and obviously it's the most complicated part of the vehicle. So there's just no substitute for putting hours and hours and hours on test articles, and hence the reasons why we have two cells running now at Stennis, not just the one, as I think we talked about that last earnings. And it's just switching between engine and engine. And some of the more interesting tests, just extra long durations to try and promote some fatigue in the engine, because obviously we want to reuse this engine over and over again. So just doing really extended burns to try and promote fatigue in items is, some of those kind of things. They just take time. Like there's just no substitute for just burning.
Okay, great. And then sticking with Neutron, is that original budget for Neutron of $250 to $300 million, is that still intact given the updating timing of Neutron's first launch? And you'd said you're near peak Neutron spending. Just any way to frame, how much you've spent so far or what's left to go? Thanks.
Yeah, I can take a swag at that. So, yeah, I mean, the program, as Pete mentioned, I mean, we've continued to make a lot of progress. The $250 million to $300 million kind of original estimate, I mean, we kind of, that got a little bit, I would say, behind us with the push from launching middle of 25 to the end of 25. And so now as we get into kind of a 2026 scenario, right now I'd say that, we're estimating that we will have spent approximately $360 million exiting in cumulative across R&D and CapEx through the end of 2025. So, we're above that. And as Pete mentioned, it's about a $15 million impact on the human capital side of things per quarter, just by extending. Obviously, prototyping, we're going to spend. It's really not impacted by the time frame. But when the program kind of delays, you end up obviously incurring an extension of that, the staffing related expenses for the program. So right now, again, we're looking at around $360 million exiting 2025. So again, as I mentioned, I do think we're approaching peak. If hopefully Q4 is the peak, and it all depends on kind of when the timing of that first launch occurs. And of course, the result of that launch as well.
Yep. Thank you. I appreciate it.
The next question comes from Suji DeSilva with Roth Capital. Please go ahead.
Hi, Pete. Hi, Adam. Congrats on the strong backlog build here. On the Electron launches, you gave some sense of pricing, but any noticing on the trend in the size of the number of launches, maybe if not now into 26, if you're trying to extend those, or is that fairly stable?
Hey, Sujit, I don't know if Adam, if you got that one, but I struggled to hear you on that one.
Yeah, Sujit broke up.
Oh, sorry. Maybe I'll repeat it. Just any observations on the Electron launches, the deals in terms of number of launches, length of the launches? Are people trying to extend the visibility there in the next few quarters, or is it pretty stable?
I think when we talk to customers, as you can see in the last quarter, it's generally not for just sort of one launch. We see folks locking in their launch capacity and buying lots of launches in one hit. We never try and let a customer down or leave a customer on the pad, so we map production with launch demand very well, but and that hasn't been a problem to date. But no, we just continue to see just growth in the demand for the product.
Yeah, and I would add to that Suji. So we've seen these larger bulk buys over long periods of time occur more on the commercial side. And as we've talked about in the past, it's kind of hard to differentiate sometimes commercial versus government because a lot of our commercial customers actually end up fulfilling government demand. So it's a quasi commercial government. But also we've been growing our Haste business pretty significantly over the last couple of years. And those have come, I would say, more like Electron originally did, where kind of the onesie twosie kind of size contracts. And I think that's hopefully the next kind of shoe to drop for us is the ability to start signing larger Haste deals that cover a long period of time and a greater number of launches, because that would give an even more certainty to the revenue ramp in that part of the business. I think that's again, that's something that we're looking forward to. So I think that would be a very helpful indicator to the longevity of that Haste business and the ultimate scaling of it.
Okay, helpful, Adam. And my other question's on the M&A environment and with targets. Is there a sense that maybe among the targets that consolidation and being part of a larger company is increasingly important, maybe more willingness to come to the table? Are you seeing any of that trend now among M&A discussions?
Yeah, I think you're seeing it in a few different places, both on the larger scale, but also I think we're seeing it also on some of the smaller scale stuff as well. I think it's a difficult environment to scale in, and there hasn't really been too many great companies that other companies want to join. And as I think I mentioned on the call, we're sort of becoming the de facto go-to guys if you want to really scale your products and the opportunities that you have in front of you.
Okay, thanks, Pete.
No worries. Thanks, Sujit.
The next question comes from Andre Madrid with BTIG. Please go ahead.
Hey everyone, good afternoon. Thanks for the questions. I think earlier today it was announced that the SDA was moving some funding earmarked for some of their programs over to troop payments. This was at more of a DOW level, but seeing that, and then you called it out, decreased cash receipts in the slide deck too related to SDA SAT work. I mean, if things don't get resolved this evening, which hopefully they do, I mean, when does the shutdown pose a significant risk to your internal 26 outlook and beyond?
Well,
go ahead, Pete.
Oh, you go, Adam.
No, I was going to say, I think that there's, so far, the government shutdown, I wouldn't say has really dramatically affected us. Yes, there have been slightly slower cash receipts, but for example, we got a very large cash payment on Friday from SDA. So I would say that the spigot has not been shut off. I think it's just been a little bit slower in flowing. So that, and to me, that's very helpful. That even before the line of sight to the ending of the government shutdown, we were still getting, and we received a very large payment at the end of last week. So right now, it doesn't really. I don't think there's going to be any. Obviously, we factored in everything we believe is to be the most likely case in our Q4 guide that we described earlier. So it's hard. No one's got a crystal ball for kind of what happens, with this when they bring the government back and kind of where they reprioritize their dollars. But again, I think we've been very fortunate so far that we've really not felt any significant impact from the shutdown to date.
Got it.
Yeah.
That's helpful. And, oh, go ahead. Sorry, I didn't mean to cut you
Oh,
off.
sorry, Joe. The only thing I'd add is like the requirement for what the SDA is doing is not diminishing; it's expanding. So it's an important program. So as far as like the need for the program, that's not getting smaller.
Got it. That's fair. I'll leave it for one. Thanks, guys.
Thanks, Andre.
The next question comes from Jeff Van Reed with Craig-Hallum. Please go ahead.
Great. Thanks for sneaking me in here. Andy, on the margin, the gross margins for Q4 in the guide, looks like maybe a couple hundred basis points of sequential improvement. Is that just kind of break it down maybe a little more? Which side of the business you're expecting that sequential increase? And then any sort of even inklings as to maybe revisions on what you think target gross margins might be for either of those two segments?
Yeah. So, the gross margin trend, in the improvement sequentially Q3 to Q4, again, is driven really by a mix where as we get more scale into our Electron business, and we've always talked about cadence being super important for the margin profile for that business because there's so much fixed cost related to it. So as you scale cadence, and Pete kind of, mentioned earlier in his comments that we're expecting, hitting a new record for launches in the year. So obviously that's all good for overhead absorption. So think of it as there's a lot of good underlying dynamics going on within the launch business as far as, size of the backlog, the ASP increasing within that backlog. We're getting greater overhead absorption benefits. So that's really kind of what's driving the strength in the launch business. And as it becomes a bigger piece of the mix in Q4, that's really the biggest factor. And I would say that within our space systems business, the trend of margins actually has been quite solid in that as well. We've talked in prior calls about how we've made very, very significant improvements in our gross margins from our Solero solar business. We've kind of talked about a long-term target there of, we get to 30 points of gross margin. That was kind of an aspirational target. And I think we're very comfortable that we're very close to that. I think we think about revisiting that one upward a bit, I think. But overall, we still believe that our launch business on Electron first, has the potential to be a 45 to 50 point non-GAAP gross margin business. We think long-term Neutron has the ability to be at least as good as that, helped by the reusability nature of that vehicle. And then on the space system side, it's really two different elements that kind of have different margin characteristics. On the space systems components or subsystems business, that has a wide range with solar kind of being at the lowest end of that, and again, around 30 points. Hopefully we can push that a little bit higher. And for some of our other components business, where we have margins that are well north of 60, in some cases 70 points of margin. And I think overall that kind of brings the gross margin profile for that subsystems business around, call it the low to mid 40s. The satellite manufacturing business, because of the nature of those programs, we're able to take what for many people is either high single digit or low double digit gross margins and have those more in the, call it I'd say 25 to 35 points, depending on the programs, because of the level of vertical integration that we bring, because those same components that we sell into the merchant market at very high margins, we basically obviously design into our own platforms. So I think longer term, I think we still see, again, a gross margin business for launch that is in the, if you want to call it the 50% range, and for space systems, probably in the, I'd say the 40, maybe low 40% gross margin range. So it puts us in a nice spot overall. But I think it's also helpful to note that, in space systems, it's not as R&D intensive as the launch businesses when you're getting a new vehicle established. So the operating margins or contribution margins for the space systems businesses, even the ones that aren't kind of in those high gross margin ranges, is still quite healthy. And then I think, I think the margins for launch speak for themselves.
Got it. Very helpful. Last one then on space systems. Can you talk about the pipeline? Obviously, Tranche 2, Tranche 3 are big needle movers, but what's the next layer beneath that look like? Like how many, 8-figure, 9-figure deals? Just some semblance of what the distribution of deal sizes that are later stage in the pipeline would be helpful. Thanks.
Yeah, so there's, we're always chasing a variety of stuff. So I think the intelligence community and the DoD is obviously big opportunities for us, and things like GEOS really provide us new kind of access and visibility to some things that aren't very visible at all. So on that side of the equation, I think there's really good opportunities for us there. But I would say also, like if we think about the bids that we've got in play, there's also some extremely meaty commercial bids as well. So I would say it's fairly well distributed across. The opportunity is fairly well distributed across both commercial and defence. But there's always the big meaty programs. But I mean, all of the business units, we kind of run the business units like little startup companies as well, and they're expected to grow really healthily every year. And you see new products coming on all the time because as they reach saturation with their customers, these business units have to develop new products to continue that growth. So this year alone, I think it's been a really great year. There's we set goals for those units, and then there's kind of the Pete stretch goal, and they've all met or exceeded the Pete stretch goal this year. So it's not just about, I guess what I'm saying, it's not just about these big projects. They're obviously important needle moving, but just the underlying business and just continuing to drive that growth in all of the business units and the underlying business is equally as important.
Got it. Congrats on the great performance. Thanks.
The next question comes from Anthony Valentini with Goldman Sachs. Please go ahead.
Hey guys, thanks for getting me on. Just a quick clarification question on the backlog and Neutron. Is there anything in the backlog today for Neutron, or is it zero?
Yeah, Anthony, we do have we have launches in backlog for Neutron. There are two fully priced missions in the backlog right now for Neutron. There's a third contracted mission, which is right now anticipated to be a ride share. And we don't have that in backlog because we don't do that until we've actually added the payloads into the manifest. And again, we've got a primary customer, but not on that third launch. We've not put any of that in the backlog yet.
Okay, that's helpful. And is there a way to think through, how that backlog for Neutron specifically ramps up? Like, does that happen once you guys do that first R&D launch, or is it a certain number of successful launches? Just historically, and like what you guys know about the industry, like how does that start to flow through?
Yeah, it's a good question, Anthony. I mean, and I think we sort of alluded to this in one of the previous questions. It's like we don't want to ever let anybody down, and people when they're looking to buy Neutrons aren't typically looking for one; they're looking for many. So a number of customers are looking to see that the vehicle does work and it scales. So we work very closely with those customers as we go along, and these are both commercial and government customers. So I think the unlocking point is certainly a successful flight in a number of these contracts, but also that we want to make sure we don't let customers down. And the last thing we want to do, and we've talked about this previously, is customers will be happy to book a bunch of Neutron at like half price, and we're just not going to do that.
Right. Okay. That makes a ton of sense. And then last one for you, Peter. As I'm thinking through the opportunity set on the Tranche 3 transport layer and just looking back at, the previous tranches, there's competition from the defense primes and some of these new space tech companies, including yourself. I'm curious how you think through the differentiators for Rocket Lab, and when you guys are presenting to, the customer, what you think really separates you from the rest of the group.
Yeah, so I think one of the big separators, and one of the reasons why we won a prime spot on our first SDA contract is that we're so vertically integrated that if we look across all of these programs, they're typically plagued by delays. Not so much cost overruns because it's a firm fixed price, but certainly delays. And when you control so much of your own supply chain, then if there's a delay in a component, you get to choose what resource you swell or push around to solve that problem. So I think that's a big element is just schedule certainty. Obviously, Adam talked about some of the margin stacking, so price is a big element as well. But at the end of the day, all this stuff's got to work. And this is where, your reputation in this industry is just so critical, and why we just never ever deviate from putting ourselves in a position where that can get compromised. When people buy a piece of Rocket Lab hardware, firstly it turns up and it looks great and it works. In an industry where that seems to be challenging, I think that's an important element. And also, finally, there's a set of requirements, and then there's how you go about solving those set of requirements, like, with the technologies that you can bring to bear. And we just have such a war chest of technologies that we can bring to bear to provide, solutions to meet everybody's requirements and then some, that I think, it puts us in a really strong position.
Great. Thank you so much for the thoughtful response.
No worries.
The next question comes from Kristine Liwag with Morgan Stanley. Please go ahead.
Okay, good evening, everyone. Peter, Adam, from your commentary from a previous question, it sounds like you're not going to go out there and go buy a Spectrum. So first question, is that a fair assessment of your statement earlier? And also second to that, with over $1 billion in liquidity and, with a broader and deeper capability set and space systems, what's your priority for M&A?
Yeah, so we look at a number of things, Christine. So, I would say that there's always opportunities for tuck-ins, and you've seen that with things like Monarch, where, that gives us a capability that we didn't have. So we'll always do those. But I think the Geost acquisition is a really good example about, acquiring a company that just brings us into a totally different customer set and a totally different capability, and also puts us at a totally different level. If you think of the big traditional primes, the one thing that sets them apart from lots of little space companies is they own the payload. So we'll continue to look for opportunities there where we can own the payload and really drive the missions. And look, we're always looking at big needle moving stuff as well. We're always look for things that we think are have a step change in either the scale or other elements of the company. So that's the way we look about that's the way we think about it.
So super helpful. And look, when you look out into the market, it's hard not to see what SpaceX is doing and in terms of their path towards that end-to-end, space solutions. So when you look at your portfolio today, it looks like you're kind of marching in a similar direction with your satellite product set too, and now you've got, these additional payloads. Where do you see your role in terms of that industry? Do you at some point want to own your own constellation and be able to sell more of that as a service? How do we think about where you are in this journey, and what does the end state look like?
Yeah, we've just sort of quietly and methodically going about making sure we amass all of the kind of the strategic elements we need to ultimately deploy things at scale. So Neutron is really an important element of that. If you look at others, access to space, and low cost, rapid and reliable access to space is kind of the place you start. And Neutron gives us that multi-ton capability. And then, if you, as you point out, you look at the space systems growth, then really at this stage, I don't think there's any satellite we can't go and build. We've got 2 going to Mars here shortly. So if you want to talk about complexity of spacecraft. So I think from an engineering perspective and a component perspective, all of those kind of bases are loaded. And we'll be very strategic about how we think about the next step, which would be building our own constellation, and whether we're providing services or infrastructure, I think is yet to be determined.
Great, thank you very much.
The next question comes from Peter Arment with Baird. Please go ahead.
Yeah, hey, thanks. Nice results, Pete and Adam. Just a quick one, I guess, on Electron, more of the demand environment. I think you previously talked about the demand for around 30 Electron flights a year. I was wondering if that still kind of holds, just given the uplift that we've seen tied to kind of all the national security launches and kind of what's going to be expected with Golden Dome and additional testing, if there's upward bias to that, and it certainly seems like it. Thanks.
Yeah, hey Peter. I mean, look, I think that's fair. Depending on how quickly and at what scale Golden Dome grows to, I think we're in a very strong position to provide critical services there. And we see nothing but upward trajectory in both government, Haste, and commercial launches for that product.
Appreciate that. And just a quick follow-up. Thanks for the comments on the Archimedes, the testing that you've been doing. Could you give us a little context? Is that much different in terms of the rate that you did originally with the Rutherfords around Electron? Thanks.
Yeah, it is. It is at a much higher intensity and rate because for the Rutherford, we only had to do half the job, meaning that we only had to go up. For Archimedes, we have to go up and down. So it's like twice the amount of environments, twice the amount of run box, and twice the amount of qualification.
Appreciate the call. Thanks, guys.
This concludes our question and answer session. I would like to turn the conference back over to Peter Beck for any closing remarks.
Great. Thanks very much, and thanks for the thoughtful questions. So before we close out today, I would like to share that Matt Ocko is finishing up his time on the Rocket Lab Board of Directors. Matt's tenure as a member of the board will end November 30th. Matt is a co-founder and managing partner at a deep tech venture capital firm, DCVC, and was one of Rocket Lab's earliest investors, serving as a member of the board since August 2021. And as a member of the legacy Rocket Lab board since January 2017. Since then, we've been incredibly grateful for his leadership and his guidance as we grew Rocket Lab together from a small startup to a publicly listed company. Now the world's one of the world's leading global space firms. And look, I just personally also want to thank Matt for backing us from the beginning and wish him all the best in his continued work in deep tech as he transitions out of Rocket Lab. Otherwise, here are some upcoming events and conferences that the team will be attending. We look forward to sharing more exciting news and updates with you there. And thanks for joining us. That wraps up today's call, and we look forward to speaking with you again soon and sharing some more progress at Rocket Lab.
The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.
So what did you guys think?
What do you think, Vince? You go first.
Really good call. I'm very impressed with the company.
Do you listen to the Q&A? You're ghostwriting the last few.
Yeah, as you see, I have the earpods, and I was sitting all day, so I was like walking around. Yeah. No, I'm really impressed, and for me, they got a total pass on Neutron being delayed, and I wonder if there's a way to calculate, because the gross margins are so high that I'm suspecting that without Neutron, like they would be very nicely profitable if there was no Neutron, like in the picture. And I'm trying to figure out a way how to calculate that, because yeah, I'm really impressed by the gross margin.
Yeah, Adam has stated that in the past, that without the ongoing R&D costs associated with Neutron, that they would be profitable.
I know, but the way I always understood it is like, yeah, like we would be $1 profitable, you know, but I feel like if we, with this high gross margin, like they would be a really profitable company, like maybe 10-15% profit margin already now at this stage without Neutron going.
Yeah, I mean, it really depends on like what we're looking forward with operating expenses. And it's kind of hard to dissect it. I mean, going from 32.1% to 37% is beautiful, but I'm wondering, there was that mention of that one-time fee, or that one-time. Sorry, let me bring that closer. That one-time impact, right? And I think this is definitely helping. 58% for Electron, and to look at this another way, that'd be like 10.2 million per launch per Electron this quarter, which is unusually high. I mean, we did have the 2 Haste launch out of the 4, but even still, like that's just unusually high. So I think it's safer to go like maybe 8.59 going forward in terms of the margins. And to make a long story short, assuming 7 launches at 8.5, we're looking at launch services of like 60 million, give or take. And kind of, long story short, I think the margins will probably be closer to 30% going forward, like they were previously. But yes, as soon as that Neutron spend comes down, which sounds like it won't be for a little while still, it's probably going to remain elevated, largely due to the R&D and whatnot around that. But yes, as soon as that takes a nosedive, which it will, mid 2026, we assume, it's probably going to look really nice in terms of profitability. And of course, that depends. Like if they start piling all the capex and R&D into Constellation, which makes a lot of sense, it might kind of prolong that. Which it's like, if your goal is profitability with this stock, then short term probably want that tap to turn off, but long term probably want them to keep reinvesting in the company, because they've shown a track record that if you let them invest in their company, they tend to do what's right for the company. So.
And imagine the gross margins like once the Constellation comes online, because like the things that are coming, like Neutron is, I think the goal there is 50% gross margin. So that will even, like the more launches you sell, the more you go like inch closer to that number. And then the Constellation, I think, is like 80% margin, So yeah.
I think the what was it called? Is it PSI? They're like data division, if you will, like all the software, like that's probably like 60 to 80% margins already. And when you kind of extrapolate that, like, once those satellites are in orbit, if you just strip out all of the hardware part of that, it gets really nice in terms of margins, like really, really nice.
Yeah.
Yeah, maybe to add on to what Vince was kind of referring to, I mean, this is what you're looking at with respect to ops cash flow and gross profit and revenue. And sorry, I have the latest fourth quarter estimate in 175 million here, but you can kind of see this green is what you're kind of left with for the gross margins, and then you subtract out your operating expenditures associated with just everything that's going on. Appreciate that. I need to adjust this axis, so this shows negative 100 million, not negative 10. But you're kind of seeing that on multiple occasions over the past 2 years, we've almost been profitable. Ops cash positive, I should say, or at least ops cash neutral. And it's really not until we've been spending an excessive amount on OPEX, which the majority of which is in R&D cost, that's where it is. But I thought it was interesting that they noted the majority of the operating expenditures is coming from that R&D overhead cost. But my question is kind of like, well, once you get to a point where Neutron is kind of up and running, you can kind of see this has continued to grow to almost $60 million a quarter now in R&D OPEX. Is this going to eventually, go to, negative 25 or 0, or how do they then readjust this R&D operating expenditure? As they noted, over 1,000 people at the moment are kind of on the payroll on the R&D side. Not all of that, I would assume, would go to just normal SG&A. Not entirely sure if they would just progress on to something else, but the obvious piece that's been weighing down on this ops cash flow is this large amount of just overall operating expenditures. So
let me tell you my guess, because in one interview, Sir Peter Beck said that these, like once Neutron finishes, they're not letting go of these engineers because they're world-class engineers and you've already hired them for Rocket Lab, and then he will just give them something else to do. So my guess would be that the R&D will like stay the same, but the revenue will keep increasing. So as a percentage of revenue, it will be less and less, and then after a while, the company will still be cash flow positive despite the R&D. That is my guess. So what did you guys think? So are you giving Rocket Lab a pass on Neutron being delayed? Are you guys selling your stock? Or
I think it was expected pretty much by this point. Like it's no surprise. It's like maybe 3 to 6 months further than I thought it would have been. I thought they would have said like early 2026, but I think realistically it's probably second half of the year. But even still, I'm not too worried about it. One thing that stuck out to me is Adam did mention 360 million for, well, that brings us to 2025 end, to be specific. So I don't know if the spend is going to go that much over budget, but probably. Thought there was one other note on there. They did mention that the return on investment barge is going to be entering service next year for their second launch, and I'm not sure if that means like if that's insinuating that the second launch is going to be in the year, or just that it's entering service next year. So said differently, I'm wondering if they are targeting more than one launch next year. And I know that like comments are probably going to be like, of course they are, but like, well, if that what we were originally assuming is like first launch into this year, realistically the next one probably mid 2026, there's going to be like a 6-month delay for them to kind of tweak anything that needs to be optimized. Maybe we are looking at one launch only in 2026, but at the end of the day, when you look at Electron's cadence, I was looking at that, comparing it with when Matt Ocko started. They're doing one Electron per year, and you fast forward 8 years, and what are we at, 20 plus, like right, 21. So it's just sit on your hands for 5 years, and I think you'll be quite content with Neutron's capacity, or what's the word I'm looking for? Like regularity,
cadence.
Yeah, cadence, and it's going to be just fine. Like rather at work than be early and not work.
Yeah, here's while we're talking about cadence, here's kind of a view as to how Electron showed up over time. So there's many ways you can kind of look at this, but yeah, I mean, we're slowly and steadily getting ourselves up to 16. I need to update this for one, but yeah, overall things are looking pretty healthy in that respect. And this is kind of where I'm at with where I think Neutron will eventually be. I mean, you have to think Electron was their first larger vehicle, right? They did the sounding rockets, and I don't really count the sounding rockets, but now that you kind of have the Electron specifically, I mean, you're outpacing the Falcon 9. Granted, the Falcon 9 started up way before Electron and obviously Neutron as well. So you're kind of building on that industry knowledge to an extent. So I'm curious to see where it ends up. Right now, I'm hoping that Haste kind of really picks up its game to really help. But overall, it's looking pretty decent. But yeah, I mean, you're kind of right. I mean, the total cadence for Electron really started picking up once you got into, what is this, 1, 2, 3, 4, 5, 6, 7 years in. So I would anticipate now that you have a little bit more knowledge, shift that out. By year 5, I wouldn't be surprised if we're launching at least once a month, maybe even slightly more. But we'll see. Yeah, we will see.
Well, another thing that we can put to rest as well, there was the mention that there are the 2 Neutrons that are in backlog. That third one we weren't sure on just based on the pricing. We were under the impression that it was a rideshare. And not only was that confirmed, but that is not even in the backlog yet. So I guess they'll add that at a later date. But with that new information, we can kind of revisit the old backlog and have a better, more accurate ASP for the electrons that are in backlog. And I mean, I guess really same with Neutron too. Can just tighten up those ranges a little bit.
Yeah,
But yeah,
no, I
ahead.
I definitely think it's interesting, and I think that it'll be awesome to see break 600 million in a single year. That'll be super fun.
Mm-hmm. And backlog, they didn't mention what exactly was ordered. Let me bring it up to bookings, because that was an unusually high number this past quarter. So right here, we're looking at the bookings for launch services and bookings for space systems. And you'll notice that space systems there's the outlier, wait, hold on, which quarter are we in here? Here it is, the $500 million, right? That's the SDA. So that's obviously the huge outlier, but outside of that, you're kind of looking at 1248. This one's unusually low, 60 million, 50 million, 30 million. This past quarter, though, it was over 100 million. And to my knowledge, there was no announcement on what that could be, whether that's like a full satellite or just a lot of components, or maybe this could be a certain reaction wheel customer. I don't know. But between launch services and space systems, bookings for this quarter were $250 million, right?
I have a question. Could it be that they brought over Geostis bookings?
Maybe that's what that is then.
Because I was also thinking on the backlog, that there was as we said, yeah.
Okay, that's probably what that is. Yeah, because it's a formula. It basically takes the backlog, subs out the revenue. Okay, that's interesting. Maybe we have an idea of what Geostis has brought to the table then.
What were the negatives from this earnings? Somebody's asking. I don't know. I mean, Neutron delay, that was a negative, but I mean, everything else is, I don't know, as good as it can be.
And I think about the Neutron. Sorry, go ahead.
Oh, that's it. Just the CapEx, the elevated spend continued forward, but like we were saying, it's whether it's being spent on this or something else, it's honestly kind of what you want long term.
And I think with the Neutron piece as well, with the 360 million, you have to think that some of this is going to be intangible costs, but some of it also is the fact that they're building multiple Neutrons in series, right? Sorry, not in series, in parallel. And so maybe initially they weren't anticipating some of that cost associated with, okay, by the time you launch, it'll be X, right? But now they've been potentially delayed on maybe some of the serial number 1 items that have delayed out by 6 months or so, that now serial number 2, serial number 3, serial number 4, those costs are also being incurred. Unless they're not counting that, but I would anticipate that they likely are.
And I guess a concern I have with that is how many of those parts could just be built in tandem, or how many do you need the learnings of launch 1 from as well? So I wonder too, it's kind of to what you were saying earlier, once that first launch goes off, you need to tweak it a little bit, but are there certain divisions that are just sitting on their hands and just well, we can't iterate on this for the time being? I mean, realistically, they just move somewhere else and being beneficial elsewhere, but that's going to be interesting to see how that plays out as well. I see Rep Warwick in the comments asking the comments about Spectrum and Constellation. Peter made a comment, I'm paraphrasing, but it sounded like they don't know how crucial Spectrum is to what they're looking at. What's your guys' take on that?
Lasers.
Yeah, lasers.
Laser beams.
Thinking it. And I really loved that he he had zero FOMO. He was we're not just going to be spending billions of dollars to be saying that we have Spectrum that they don't even know what to use for. I honestly get the impression that Sir Peter Beck is a kind of guy who says what he means, publicly and privately, and it might be that they really are not thinking yet about the constellation. They're just focusing on Neutron, and it's useless at this point to to make plans on the constellation, because there can be so much technological advance. There can be different demands in the future, like maybe now it's the Golden Dome, but maybe in the future it's going to be lasers or whatever, or space data centers. So I honestly think they're not thinking about it yet. They're just keeping the head down and focusing on Neutron.
I don't think they're not thinking about it per se. I think that they're delivering for their main customers, and with that, they're learning as much as they can about how to iterate on their own constellation. And so I see I'm not trying to devalue what you said. I agree. I don't think that they're, but I think there's so much opportunity for the SDA contracts, what they've acquired now with Mynaric, and so many other things that they have to deliver on ahead of time. I anticipate they're taking their notes, and I don't think it's going to be very difficult for them once they've delivered some of these items to eventually push that over to being their own constellation.
Yeah.
Scotto, is that spreadsheet private?
No, it's available. It's available through the Patreon, as well as Shift4, Redwire, BlackSky, Planet Labs, and probably EOS Energy in the near future. So yeah, it's
Scotto does a good job. Scotto does a real good job.
Thank you, Maddie.
But yeah, I'm really cautiously optimistic, man. I mean, I never was doubting the company at all. As always, these guys continue to deliver. Am I disappointed that we're being delayed by a quarter or two? Of course, but I mean, to me, I was kind of prepared for it, and to me, it's not going to force me to sell my shares. I know a lot of people were like, "Oh my God, they're not going to get it off." It's like, seems like there wasn't any wholesaling after hours, so it doesn't seem like a lot of people went after market. Now, of course, not everyone has the capability to sell after hours, so I guess we'll find out tomorrow what people actually think when the market kind of opens. But to me, it doesn't seem like such a large deal.
Mm-hmm. It's quite surprising seeing the 7%. Like, I don't know if that's like they're excited about Q4 guidance, or if they're. It's interesting. I would have been, if you would have asked me like 2 hours ago, what's the share price going to do if there's a delay for 6 months? I'd been like, it's down for sure. But market does not seem to care.
I mean, it's funny. I made this prediction before earnings that there's like more downside risk than upside risk, and unless they pull a rabbit out of their hat, and like. They are delayed on the Neutron, but the other parts of the business like more than makes up for it. So like in a way, I feel that they did pull a rabbit out of their hats, because yeah, I mean they're just doing really good. The only thing for me that is like because I feel that in Rocket Lab's value you have a lot of the constellation already priced in, and I feel that the Neutron delay, like it does push out partially the Neutron revenue and your own constellation revenue, right? And then it has to be further discounted. Yeah. So I understand why we're not up like 30-40% on the stock. Maybe we would have been if Neutron is on time and the numbers are as good as they are now.
Mm-hmm. Mm-hmm.
I'm really excited to see what happens. Obviously, we have our remaining 6 weeks or 7 weeks for the remainder of the year, and it seems like we're going to be hitting a launch cadence of 21 in the trailing 12 months here in the next couple of days. If that launch goes off, from what it seems like, it'll be within the next couple of days. They iterated a couple times, and we have until the 24th, right? So anything between now and the 24th of November would be adding to that trailing 12 months. So I'm excited. Hopefully we'll be able to get 21, 22 launches. And if you just keep that cadence up, you'll eventually flow through, and hopefully by the end of the year, we'll get to the 20 plus that is kind of stated. But I feel like to grow massively, maybe it's just the realization of space systems with the SDA Tranche 2 starting to roll off the assembly line and the revenue recognition for that. but it seems like you're going to have a lot of launches like you predicted, Scotto, to really get that 170, 180 million revenue for the fourth quarter to get you to that 600 million.
Agreed.
I mean, if we just play with the numbers, what was the space systems last quarter? Because if you get 10 like if we would go up to 25 launches, that would be almost 85 million just in launch revenue, right? And I think space systems is like 100, 120, I think. Yeah, 110, 120. So if that one also grows, then you're over 200 million. Which tells me that they're probably not thinking with 10 launches.
For Q4, you mean?
Yeah.
I think 7 is like realistic. Like that launches at 21, brings us to 60 million for revenue for launch. I think that's realistic, and that 100 and that's assuming that space systems just stagnates too. That puts us at our mid range of 170 to 180. That's probably what we're looking at.
Are you full porting, Vince? What are you doing? You buying more?
I might be like, once my cover calls expired, I'm tempted to full port back into Rocket Lab, because I don't know, I was thinking about that. I mean, my trust in Sir Peter Beck, and like how he answers I mean, I just really would like a dip. I'm praying for a dip. I'm sorry, guys. You can hate me in the comments, but yeah, the problem is that there's too many of us praying for a dip. It's hard to get one.
Maybe that's what it is.
Yeah. I mean, look, if I do it the Matt way, right? What you told me in the US, or what we talked about, like, I'm very confident that once it comes to the constellation, then Sir Peter Beck is, going to come up with a genius way how to enter that business. They will have very low cost margin because of the Neutron, and I think that easily, just like if they get a good constellation deal, easily just that part of the business will be 100 to 200 billion. Like not thinking with space systems, and not thinking with the launch. So I think that in 10-15 years, there's an easy path that this company can be multiple hundreds of billions of dollars, and we're at 20, I think, right?
Yeah, around 25.
Yeah. So still a lot of upside.
Yeah, and that's not inclusive of any buybacks. Obviously, buybacks right now is kind of hard to believe.
And dividends.
Yeah, and eventually dividends. Yeah, I mean, I'm honestly, I think a lot of people are like, you're crazy, right? But I mean, I don't plan on, if everything continues to go in the trajectory and pathway that I think. I mean, there's no reason to sell the company unless it gets to like $1 trillion market cap, and it's like, well, maybe I don't see it going beyond $1 trillion, so I should sell it. But to me, unless it jumps up to some absurd valuation, which is hard to quantify what would be absurd, because I don't know what the constellation value would be, then it doesn't make sense to sell it. In that case, I am planning on holding it for as long as I need to. I mean, I don't see a need or any point in time now to sell it, and if anything, I'd borrow against it. So,
yeah.
I see a comment from Whiskey 911. Has there been any customers wanting Flatellite yet? I've not heard anything since they said it was available. It was actually mentioned to be designed in partnership with customers, like said as a plural. So that should answer your question. It's not just like being designed and like, hey, do you guys want this? Like multiple groups have come to Rocket Lab and wanted something that became what is now the Flatellite. So it's a matter of time before those are announced too, because I'm sure they're not intending to build one or two of those. I'm sure those are going to be sizable contracts when those are announced.
Yeah. Yeah.
Cool.
Yeah. Cool. Yeah. I mean, good job, Rocket Lab. I'm really happy with this earnings call. Just want my dip. Where's my dip?
I really did think it was going to dip for the Neutron. Or like maybe it was. I wasn't predicting it, but I was kind of hoping because I would like to buy more, but it is what it is. And I feel bad saying that because I know some people don't have the mindset that I do. Some people, don't add as regularly as I do, and so when they hear me say that, they're like, "I can't believe Matt wants me to lose money." All that, and I get it, right? I just have a different mindset, and the way I look at it is I look at Rocket Lab as a company that I want to own a large percentage of. Like I want to own a percentage of Adam's brain. I want to own a percentage of Peter's brain. And that means having as many shares as I can. And so when it did dip last week to the 46s, I did buy. And I just wish I had more capital on hand to buy more. But you never know what's going to happen. And so that's why every paycheck I continue to use it to buy more and more because I just want to own as much as possible.
Yeah, it's 1 a.m. in Europe. Thank you guys for the stream. Yeah, I'm painfully aware that it's 1 a.m.
Cool. Well, but yeah, if you guys have any other thoughts, otherwise.
It's true. Somebody's saying I'm not mentioning that we went from 73 to 46. That's correct. That was a dip. That was a dip. But I want a bigger dip. I'm greedy here.
Yeah, I saw 46. I said, you never know if it's ever gonna get this low. You don't, maybe people think it should go back to 30 or $40, but you don't know if it's ever gonna get there. So what you can say is, hey, it's $46. Let me buy
I think
it.
if it goes back to 30, I will full port. I think. We'll see.
Here first.
We'll see what happens.
All right. Well, thank you, gentlemen. Don't mean to kick you off if you have any last bits of words.
No, I'm gonna go crunch some numbers.
Yeah, excited to see your charts. You always do a really good job on X. If you guys aren't following on my stream, at least I have both Vince and Scott, so they're down below. Be sure to follow them, and also Rocket Lab's main channel on YouTube. Be sure to follow them as well. But yeah, appreciate you guys so much.
Thank you for hosting.
Thank you for.
hosting. Thanks for bearing with us through the audio issues.
Yeah.
Cheers all.
Cool.